JP Morgan says the January effect could give a boost to these stocks. What stocks are they talking about? Beaten down stocks, specifically mid-cap stocks. And we're going to go over exactly what this is and what JP Morgan is actually saying, because this is incredible. And we're already seeing this be reflected from the inflows to AMC from institutional investors increasing in the month of December at a 10 times faster rate than we are used to seeing from June. Typically, we do see hedge funds buying AMC stock, but at a much slower pace than in December. So let's get into this video. Do what you guys got to do. Hit the like button for me. Consider subscribing to the channel. If you guys want free stock, down below in the description of this video, all the links your heart could ever desire for free stock is down there, as well as the pinned comment for the buy and sell alerts. And go ahead and follow me over on Twitter. So exactly what is the January effect? Yes, I have talked about this a couple of times, really over the past couple of weeks, but now we are seeing JP Morgan. We're seeing very encouraging data, as well as even Forbes talking about this. So the January effect, what is the January effect? The January effect is a perceived seasonal increase in stock prices during the month of January. Analysts generally attribute this rally to an increase in buying, which follows the drop in price that typically happens in December when investors engage in tax loss harvesting to offset realized capital gains, prompt a sell-off. So it's basically what I've been saying. That's why AMC has been dropping so much, as well as other stocks that you guys might be invested in. I know I'm invested in a lot of small to mid cap stocks that are getting beaten into the ground because of tax loss harvesting. The key takeaways: the January effect is the perceived seasonal tendency for stocks to rise in that month. Since 1938, 29 out of 30 years of gains seen in January to February resulted in average yearly S&P 500 advance of 20%. The January effect is theorized to occur when investors sell winners to incur year-end capital gains taxes in December and use those funds to speculate on weaker performers. That's the key, weaker performers. Like other market anomalies and calendar effects, the January effect is considered by some to be evidence against the efficient market hypothesis. Now, Forbes, what they are saying about the January effect. What will make you money in 2022? Historically, researchers have found that January has historically been a strong month for stocks, especially smaller companies with weaker performance the year before. Might we see the same trend in 2022? That's the key. Smaller companies with weaker performance the year before. What has AMC had? A strong performance if you take a look back to obviously where we were last January. Can't argue with that. From $1.91 to $28.86 per share. But most of these funds, a lot of them bought in June. So there was a lot of tax loss harvesting that has taken place. And we're even down to a level where the fundamental valuation is not too stretched at all. We just seen the Spider-Man movie come out. Incredible numbers. We know AMC is going to be free cash flow positive, aka able to support themselves without running through any more cash here in the first quarter of 2022. They are potentially going to post an incredible profit because their business is much more efficient now than it has ever been. So I think there's all the reason in the world to be buying AMC stock, and I think they are going to benefit from this, as JP Morgan as well as Forbes is talking about right here. Some other stocks that are likely to do well: Corsair, 30% short interest; SoFi, DraftKings, these other stocks that I am personally invested in that are down 45% from their highs. But I think AMC has a very strong rebound effect because they're obviously a part of the economy that is the recovery sector. And we know there is a strong will for people that want to go out and do things. A lot of people haven't been doing too much, obviously, over the past 2 years. And now you're seeing people want to go out and do more things. We can see this reflected in the holiday sales numbers. They jumped 8.5%, MasterCard says, as shoppers shrug off higher prices. Nike was even boasting that they didn't have to mark down their product because people were paying full price for it. If people are paying full price for products, do you think they're going to go out and use services like AMC? I think so. If they do or if they don't, it really doesn't matter. The perceived motion that they will in 2022 is going to lead to the January effect within AMC and lead AMC to go much higher. Like I said, we are seeing throughout the month of December already. This is more proof that the fundamental valuation in between this range is even more justified, as more big money, right? Smart money, big air quotes there, is buying AMC stock. So I think this story says itself, it tells itself. The data is here to support everything that I'm saying. This is not new by any stretch of the imagination, but it's good for you guys to hear this information. My price prediction, my price target by end of January, if not early February, is around $60 per share. I think that's pretty reasonable. I'm not going to clickbait you guys and say we're going to be at $500 or $10,000 by then, like you will see on some other videos. I could be wrong. We could only be $40 or $50 by then. I don't think it really matters, and I think you guys fully understand this is a time game, and eventually the data must come to fruition. So hit the like button for me. Do what you guys got to do. Consider subscribing to the channel. Let me know what you think about the January effect. Do you think this is going to play into big money buying AMC? Do you think it won't? Shills, welcome down below in the comment section. We can argue about it all you guys want down there, or have a friendly debate, I should say. Love and appreciate you guys. Thank you for watching this video. I will see you in the next one.